Happy Friday, IHMC friends and family. It's Shayan with Integrity Home Mortgage, back with your weekly mortgage market commentary. So mortgage rates have been slightly improved over the past 2 days, but have been trending persistently lower over the past 2 weeks. Over that period, the economic data has actually been pretty friendly to interest rates, but that hasn't been enough to alleviate market concerns over two key items, two very familiar key items, and that is persistent inflation and the Fed. So let's take a second to look at inflation first. Both CPI, which is consumer inflation, and PPI, which is producer inflation, both came in lower than forecasts, but we need to keep in mind that both are still above the 2% Fed's 2% target. And in the case of CPI, the numbers actually came in higher than last month. So we are trending in the wrong direction. So inflation remains elevated and potentially trending higher. And with tariff impacts anticipated to start showing up in the numbers in the coming weeks and months, fears of resurgent inflation are once again gaining momentum for investors. Moving on to the Fed, the theme from comments from the Fed officials this week highlighted these same concerns: inflationary pressures, the fact that they could be exacerbated by a long and drawn out tariff plan implementation. So many Fed members want to continue to take time to analyze the data as it comes in, meaning continue the pause on rate cuts. Now, others want to cut now and then analyze the data. So there's a divergence of opinion that's become pretty apparent among FOMC members. So you'll remember the median expectations from the FOMC is for 2 rate cuts to happen this year. But keep in mind that that's a median, meaning that there are some members who are on the high side of that median and some members who are on the low side of that median. That divergence highlights the high degree of uncertainty in the economy and thus in their policy making. Finally, and this is an important one, the rumors that President Trump was planning to remove Jerome Powell resulted in some additional volatility over the course of this week. That rumor was denied by the president, but not before it started a conversation around the independence of the Fed. To be clear, the concept of independence is fundamental to the Fed's ability to influence markets and effectively manage their mission. There's not really anything to talk about now, but this will be an important conversation if this story finds legs and President Trump decides to remove Jerome Powell for someone who is a little bit more politically motivated. So keep an eye on this. In the end, market expectations are still for 2 cuts by year end, although the confidence around that expectation is diminished a bit, which is what's leading to rates going up over the course of the last couple of weeks. But that is not to say that they're going to begin later this month. In fact, the probability for a cut in July currently sits at essentially 0%. So in order to meet those expectations, the Fed's going to have to go 2 for 3 in September, October, and December. That's all I got this week. Have a great weekend, and we will talk to you next time.